Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ALLEGION PLC quarterly report. Allegion PLC offers a wide range of security products and solutions worldwide. The company's business portfolio includes door controls, exit devices, and door systems, electronic security products and access control systems, locks, lock sets, portable locks, and key system services such as inspection, maintenance, and repair services for automatic entrance solutions, software as a service, including access control, platform integration, and workforce management solutions, ongoing aftermarket services, design and installation offerings, and locksmith services. These products and services are sold to various markets, including commercial, institutional, and residential facilities through multiple channels such as specialty distribution, e-commerce, wholesalers, do-it-yourself home improvement centers, online platforms, and small specialty showroom outlets. The significant increase in Allegion PLC's stock price over the past year can be attributed to several key factors. The company has consistently reported strong financial results, exceeding Wall Street expectations, with double-digit revenue growth and effective capital deployment. This is evident in its Q3 2025 earnings report, where it surpassed analyst estimates of $2.21 per share, with adjusted earnings of $2.30 per share. Allegion's strategic acquisitions and product portfolio expansion have also contributed to the stock price increase. The company has made several key acquisitions, including ELATEC, Nova's Hardware, Trimco Hardware, Lemartai Limited, Next Door Company, and Krieger Specialty Products, which have enhanced its global electronics portfolio, door hardware offerings, and security and accessibility capabilities. Strong demand across various end markets, particularly in the Americas non-residential market, has driven growth. The increased awareness of security and safety has propelled the Allegion International segment, with electronic security products experiencing high demand. Additionally, Allegion's commitment to returning value to shareholders through dividends and share repurchases has been a positive factor. Positive changes in analyst ratings have also contributed to stock price adjustments, with 3 analysts upgrading Allegion PLC's stock within the preceding month. Overall, Allegion PLC's strong financial performance, strategic acquisitions, growing demand, and commitment to shareholder returns have all contributed to its stock price increase over the past year. The primary drivers of revenue growth. Allegion's revenue growth can be attributed to several key factors. Acquisitions have played a significant role, with notable increases in revenue following the Unisol acquisition in June 2024. Favorable pricing and volume growth in both Allegion Americas and Allegion International segments have also contributed to revenue growth. Improved pricing has been another driver of revenue growth, with a 4% contribution noted on page 27. Additionally, volume/product mix has positively impacted revenue, with a $12.7 million increase mentioned on page 28. Currency exchange rates have also had a positive effect, contributing 0.9% to revenue growth. These factors combined have driven Allegion's revenue growth, highlighting the company's ability to adapt and expand through strategic acquisitions and pricing strategies. Net income and profit margins. A mixed picture. The net income of the company experienced a mixed trend over the period. On one hand, it increased by $42.9 million, representing a 9.5% rise from $453.4 million to $496.3 million. However, this growth was followed by a decline of $101.2 million, resulting in a 14.1% decrease from $597.5 million to $496.3 million. Profit margins also showed contrasting trends. The operating margin increased slightly from 21.1% to 21.4%, while the net profit margin likely rose due to higher operating income and lower interest expenses. However, segment operating margins for Allegion International decreased from 8.6% to 7.7%. The reasons behind these changes are varied. The increase in net income can be attributed to favorable impacts from acquisitions, foreign currency exchange rate movements, and improved pricing. Conversely, the decline in profit margins was due to higher acquisition, integration, and restructuring expenses, as well as inflation and investment spending exceeding pricing and productivity gains. The company's financial performance indicates a positive trend in its operating cash flow. The data shows that the net cash provided by operating activities increased from $456 million in 2024 to $543.7 million in 2025, demonstrating a significant improvement in the company's ability to generate cash from its core operations. This increase suggests that the company is efficiently managing its resources and generating sufficient revenue to cover its expenses, resulting in positive operating cash flow. The company's financial performance reveals a mixed trend between interest expenses and debt levels. While interest expenses have decreased significantly by $2.2 million, 7.7%, from 2024 to 2025, the overall debt level has increased. Specifically, long-term debt rose from $1,977.6 million to $2,059.5 million, and total debt increased from $1,999.5 million to $2,087.7 million. This indicates that despite lower interest expenses, the company's debt burden has actually grown. The financial performance of Allegion's segments varied across regions. In the Americas, Allegion performed exceptionally well, with net revenues increasing by 7.9% and 7.1% in 3 and 9 months respectively. Segment operating income also saw significant growth, rising by 9.6% and 10.9% over the same periods. Allegion International also showed strong performance, with segment operating income increasing by 10.1% in 3 months. However, a decrease in segment operating margin of 3.1% in 9 months was noted, indicating some areas for improvement. Overall, Allegion's Americas and International segments demonstrated resilience and growth, contributing to the company's overall financial health. Management's outlook on the company's strategy is one of cautious optimism. They expect continued growth in revenues from non-residential products and electronic security solutions, driven by improvements in pricing, productivity, and product mix. However, they also acknowledge a challenging market environment due to inflation and uncertainty in key construction and remodeling markets. Despite these challenges, management believes the company's financial position is sound, with sufficient cash flows and borrowing capacity to achieve its long-term strategic plans. The company has made significant acquisitions over the past year to expand its business and operations. Key acquisitions include Nextdoor Company, Lemar Thai Limited, Trimco Hardware, Nova Hardware Thai Limited, ELATEC, and Gatewise Inc., all of which were completed between February 2025 and July 2025. These acquisitions are detailed on page 26 of the report. In contrast, there have been no divestitures mentioned in the report, indicating that the company has not sold any significant assets or businesses during this period. The company's financial summary reveals its commitment to returning value to shareholders through both dividend payments and share buybacks. In 2025, the company paid out $131.4 million in dividends and bought back shares worth $80 million. Similarly, in 2024, it distributed $125.6 million in dividends and repurchased shares for $120 million. Additionally, the company has authorized a share buyback of up to $500 million, demonstrating its ongoing efforts to reward shareholders through these initiatives. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals a significant increase in total inventory, rising from $423 million to $524.9 million. This buildup is evident across all categories: raw materials, $237.7 million, work in process, $53.8 million, and finished goods, $233.4 million. The substantial jump in finished goods inventory suggests potential supply chain disruptions or production inefficiencies, which may impact the company's cash flow and overall performance. That concludes the financial summary for ALLEGION PLC. Feel free to comment below, and I will be happy to answer them when possible.